Hello, everyone, and welcome to today's live market check-in with myself, Greta Wall, your host, and the leader of T3 Live's Momentum Express virtual trading floor, JR Romero. JR, thanks so much for joining me for this today.
Thanks for having me, Greta.
Yeah, how's your trading day going so far?
Pretty good. Got a lot of volatility, a lot of movers. We got the Morgan Stanley conference, popping names, dropping names. We have Powell testimony and a lot of data coming our way. So yeah, perfect market for a day trader.
Great. All right. So let's talk all about those things that are serving as catalysts for the market today. The title of our stream today is Fed in Focus. As you mentioned, Fed Chair Jerome Powell is testifying in Congress today. This is part of his semi-annual monetary report to Congress. It's nothing that is unexpected or abnormal for him to be doing. In the statement that was released ahead of time for today's testimony, the gist is that the Fed is not ready to cut rates yet. They're remaining data dependent, but they are concerned about not losing progress that they've made against inflation so far. So they want to make sure they act when appropriate to start cutting rates, but they don't want to do it too soon to where inflation would kind of come back. So how are you seeing his testimony today impacting the market in particular?
I think this is just my opinion. I think the market was looking for no surprises. Powell is walking a very tightrope between the December summary of economic projections and the data we're continuing to see, and pushing rates back based on what the Fed futures are doing. So it's a very difficult tightrope for him to negotiate, I would imagine.
Yeah, definitely. The Fed is, of course, focused on the labor market at this point. That's their main focus. As you know, all the data shows inflation is definitely on the downward trajectory, but so far the jobs data has been hot. This morning, though, we got some new data. ADP reporting the private sector added only 140,000 jobs last month versus 150,000 expected. And then the JOLTS survey came out a bit later. That was also lighter than expected. 8.863 million jobs that were available in January versus the 8.9 million that had been expected. Of course, the big number is on Friday, the official jobs report. The expectations there are 150,000 jobs, unemployment rate unchanged at 3.7%. How are you positioning yourself ahead of that NFP number on Friday?
This is not going to be a popular opinion. I don't really care.
Okay.
As far as the JOLTS is concerned, it's a really problematic reading. Companies and institutions have learned to game the system. So in terms of the JOLTS, basically, you have like a 3 or 4 prompt problem. Company typically realizes they need a worker or forecasts that they're going to need a worker. Traditionally, they fill a job and they advertise it, and it's all a nice linear type of narrative. That's not what really happens anymore, right? We have a aging population that kind of checked out after COVID, and then a gig economy where workers are basically working multiple jobs and spamming job sites with resumes. So always hiring's become a moniker and a meme. Job postings are left up indefinitely, even when companies are not hiring. And so that creates a sort of a data doom loop, in my opinion. According to the Wall Street Journal, half the companies that post advertisements aren't actually actively trying to fill the position. They do that for several reasons. They want to convince the overall market that the company's growing. They also want to sometimes give employees the impression that maybe help is on the way and that they're looking to increase the workforce when they're not. So another reason is they look to stockpile pools of ready applicants to have in the hopper, so to speak. The other problem with the JOLTS is that sometimes you'll see one job, but you'll see 50 different postings for it. we in this type of post-COVID economy, you have jobs posted all over the United States, but it's really the same job. A lot of companies are expecting remote workers to be able to fill in those gaps. So it's not really a reading that I take particularly seriously anymore. Do you know what I mean?
Yeah, totally. All of this data today and the Fed's testimony today and tomorrow, of course, comes a week ahead of the Fed decision. That's, of course, the most important thing that people are focused on. Of course, no rate cut is expected at this point. We will get an updated summary of economic projections, aka that dot plot. So talk about your strategy on Fed days in particular as a day trader and a scalper. What do you like to do when it comes to Fed days?
Sure. So on Fed days, I typically do what I do every other day, which is come prepared with levels, supply demand zones for the instruments I trade, and to really be focused on the three most important indicators in this market, which are the 10-year, the dollar, and the bonds. You can watch the TLT or whatever else you want to watch, but those are the things I look at, and they instruct my bias in terms of what to do next.
Okay. And then you've mentioned, of course, that the Fed had that really dovish dot plot back in December. And then, of course, things have kind of come in much hotter than expected since then. And so they're on this tightrope of, what do they do? Are you expecting any changes in that updated summary of economic projections next week?
I don't see how they can fit in 5 rate cuts this year. I hear talk of June being the earliest rate cut, but it's really hard to tell what they're going to say. So again, I trade the reaction. I don't really try to anticipate or fortune tell. I'm a terrible fortune teller. I'm really good at trading a chart once an event's taken place, primarily because I come ready for action. I've identified supply demand zones. I know where buyers and sellers are, and I can see in terms of just basic intermarket analysis what key structural elements of the market are doing, and that really guides my bias and my actions.
All right. Just a reminder for everyone who's with us live. We have a great number of people here live. Submit any questions you guys have for JR in particular, and we will get to those. So whether you're on YouTube or Twitter or Facebook or here on StreamYard with us, go ahead and submit those questions, and I'll make sure we get them answered. All right. So JR, the market is rebounding from like a really quick tech sell-off. The past 2 days, of course, were down days for the market. This is a look at the S&P 500 chart as of earlier this morning, and also the chart of the Qs from earlier this morning. So you were saying earlier before you and I got on that this has been a great trading day for you, lots of action out there, especially as a day trader. How have you been navigating today's session? What have been your favorite trades so far today?
We've been playing the strength in AMD against the weakness in Tesla. Okay. It's not quite a pair trade, but it's been working really, really well. So, for example, last night we saw AMD holding key price levels as the S&P's hit 51. The S&P futures hit 5160, and so basically we were watching the 202.30s in AMD as it wedged into the close, and they began to buy up the market. So we took that overnight for a very nice solid gain, about 7 points or so. And Tesla has been basically a bad news machine for a couple of months now. There was I believe it was Adam Jonas who came out with a very negative note on Tesla and the EV market in general, talking about a serious slump in demand, as well as production issues ahead. So we've been taking every opportunity to short the EVs on any kind of strength.
Okay. So some big news coming up for the market, well, not big news, but big changes coming up for the market is that SMCI will be joining the S&P 500 as of the open on March 18th. This was news, of course, announced last week.
Yes.
SMCI and Deckers Outdoor replacing Whirlpool and Zion's Bancorp. Yep. All right. So this is a look at the SMCI chart year to date as of 9:56 a.m. earlier this morning.
Yeah.
Stock has been obviously on a massive run. The stats heading into this change are SMCI as of today, this morning, had a $62.4 billion market cap. Obviously not a small cap stock anymore and does not belong on the Russell 2000 at this point. This will increase, of course, market exposure to the AI, overall market exposure to the AI sector.
Yeah.
Yes, definitely. So the questions are, how long can this rally really continue? And also, lots of chat about a stock split. Does the stock need to split? And then if it does, as a trader yourself, how would you say that would impact the way it trades?
Well, it's probably going to be a stabilizing factor as part of the S&P 500 and the SPY for sure. If you look at a weekly chart of SMCI, I don't know about you, but I certainly get 1999 flashbacks. I think the difference here is that the technology driving the late 90s rally was not yet actionable, whereas AI is here, and it's many analysts predict that it'll be bigger than the Industrial Revolution. We're talking about a complete restructuring of our productivity and workforce. And if you look at SMCI, the 4P is like 38. You know what I mean? Technically speaking, looking at this chart, the technician in me wants to see a deeper retracement off the breakout at 361.29. I don't think we're going to get a retracement to 707 at all. This thing to me looks like it's going to 2000. Possible catalysts ahead would be a stock split, I would imagine, in the near future. But this is one of those charts that really looks like it's going much higher, despite the fact that it's gone parabolic.
When you look at a chart like SMCI that, as you say, has gone parabolic, what is it about the chart that you say this has room to move higher, even though it's just pretty insane at this point, versus pulling back right now? If you want to, you can share your screen and we can go through the chart.
Well, momentum is created typically by a deep imbalance in supply and demand, right? I don't want to get into the nutty professor territory here, but just in terms of the adoption diffusion model, I think the market realized late that AI was a lot closer than everyone thought, and it's created a huge imbalance in terms of demand and supply as far as value. And so you get these parabolic moves that tend to go a lot longer than people expect. And if you look at the fundamentals in NVIDIA, SMCI, AMD, they're not terribly expensive considering the potential of these companies. Now, SMCI, in terms of its competitive moat, in my opinion, has a lot more fragile of a moat than, say, for example, NVIDIA does, right? So I think it's not in the same kind of defensive position that a NVIDIA or an AMD would be, or maybe an Arista Networks. But I think you see this kind of pattern when the market realizes late that a big change is upon us, and you get a sort of price action game of musical chairs.
Sorry. Throughout 2023 and then into 2024, our market leaders, of course, were the Magnificent Seven. I mean, they've been the market leaders for longer than that, but your Meta, Amazon, Apple, Google, Tesla, et cetera, et cetera. been a change, I think, in market leadership as of recent months, definitely. And it seems the AI names, NVIDIA, SMCI, are definitely kind of the new leaders in the market. Do you think
Yes.
they have the potential to be long-term leaders and kind of derail those mega cap tech stocks that have led for so long?
No.
Okay.
Personally, I don't think so. I mean, again, I am terrible at predicting the future, Greta. That's not my job. But having a computer engineering background and being involved in technology my entire life, I see, again, word I hate. This is a very pretentious sounding word, but I'm going to use the S word, synergy. I don't think the market understands the synergistic effect AI is going to have on companies like Apple, Disney, um, Meta. It's truly astounding.
When you look at a company like Apple, it used to be, as goes Apple, so goes the market. That there's obviously been a strong disconnect between that. In recent months, Apple has been down while the market has been hitting new record high after record high after record high. What has changed in the, trading of Apple and how it relates to the broader market, do you think?
I don't think much has changed. Every few years, the market has a freak out about Apple. I mean, how many times has Apple been counted out? How many times have we been told, Apple is done? I think there's going to be a slingshot effect with Apple. Their ridiculous looking AR goggles are going to improve. And I think that alone could be a very lucrative business for them. We understand the AI productivity gains economically in the market. I think we have yet to gauge the kind of innovative and groundbreaking technologies companies like Apple are going to be able to accomplish with augmented reality and artificial intelligence. So I think there's going to be a huge slingshot effect for Apple, not to mention Microsoft.
Okay. Let's look back on a couple of your recent trades. Two ideas that you gave me that would be good to talk about were the AMD long that you did last week. And it sounds like you're still kind of working on trading that stock, and then your Tesla short on Monday. So I'm going to ask you to share your screen so that we can go through some charts for these.
Oh boy, here we go. I gotta call my tech support people.
At the bottom of our screen, there's a thing that says present. And if you hit that, you should be able to share your screen.
Yeah. I can't find the button, says the computer engineering major. Hold on. There we go. Okay. Present. Share screen. Okay. 1 second. Sorry, folks.
All good.
Us old guys. Okay. Let's see. Share screen. Did I get to choose? Oh, yeah. There we go. Window. Okay, perfect.
All right, great. All right, so I'm going to pull that up now. And so let's talk about that AMD long from last week, what you were seeing in the chart, how you executed the trade. Give us the nitty-gritty details. People on these are, traders, and they want to hear the nerdy trading, all of it. So you're not boring us.
So let me just get all the spaghetti wiggles out of the chart here. AMD has been on a huge bull run since November. We bought the market very aggressively in late October, November, and rode up the spiders and the Qs nicely into January, February. And then you see here AMD had a bit of an exhaustion high on January 24th and proceeded, this was your little buying climax here in AMD on the 24th. It set a pivot low, a new high, formed a range in a new value area right here. And then from there, we were watching carefully that prior pivot low from January 31st. We had our shakeout and then a sign of strength here into last week right there on the February 28th. So basically, what we saw this as, what we interpreted this price action to be, was really a reaccumulative range with a shakeout there on February 20th. So once we gapped higher on the 22nd, I put AMD on watch, and I'm going to go here to a 15-minute chart so you can see what we were looking at. So right there, we had a secondary shakeout on the 27th. We went long AMD around 176.40 with a stop underneath these lows, and we had $190 and $200 as our target, and basically rode this entire long and added to the position. I personally added with options into the 190 and 200 targets, and then once you identify a move like this and you're able to draw a discernible channel, right? Yesterday, for example, into the close, as we were compressing into the ascending line, we went long AMD again, and nice pop there through the prior highs for a nice rinse and repeat move. Really beautiful 7-8 point move there. So basically, my approach as a trader is to play sequences, right? Once I see that a recumulative structure is showing a sign of strength and is ready to break out, I'll take action, take it for a long or short position depending on the setup. And once the main thrust is complete, I'll look for pullbacks to a potential reaccumulation or demand zone to re-engage the move.
All right, now let's talk about a trade on the other side of that, the Tesla short from earlier this week. I think you told me it was on Monday. You said AMD and Tesla they're not a pair. What was the word you used?
Well, I've been treating them basically sort of as a pair. Basically,
yeah.
I've been buying the dips in AMD, selling the rips in Tesla.
Okay. So talk about Tesla, that you're short this week. Same kind of thing we just did with AMD.
Yeah. So Tesla, I'm going to go to the hourly chart here. We were watching. So we had a gap down on Tesla around 206.50 was the prior pivot low, and we gapped lower on the 25th of January. And in the room, we were looking at this rising wedge right here. There's a lot of spaghetti on the chart. I apologize, but basically you can see a rising wedge right into this prior gap fill right there. So when Tesla came out with negative China news, and we saw that this 198.37, 198.40 pivot was broken off the open, and you were underneath all the prior anchored VWAPs from the breakaway bars. We set hard on that Tesla short through 192.50 into the lower VWAP ends here, 192.50, 190, 138. So that was a really nice 8-9 point move there intraday. It's about 20-30 minutes, and then on that day, once it broke 190.104, got back on for a retest of this pivot low here, 190, 189.13. So that's typically our approach. You have a clear overhead supply zone on this day here formed. A lot of people were expecting. You see this failed bar here. People were expecting this channel to snap back and maybe test the hourly 200 on 231.50, and instead it trapped all buyers, gap lower, and it really did not ascend in a particularly bullish fashion. So when we came back into this prior area where you had a clear, very delineable set of trap longs, it became a relatively easy short. And so it's typically our approach to trading the markets, right? We're deeply observant of where buyers and sellers are lurking and take advantage of the momentum that's created when those imbalances become apparent to the rest of the market. And we're able to really capitalize on that voluminous momentum in the direction, hopefully in the direction we're trading. So.
Yeah. You say there's a lot of spaghetti on this chart. So talk about what your personal favorite indicators are when it comes to finding trades for yourself.
I like to anchor volume weighted average at key pivots. That just gives me an idea of where the dollar cost average is from my point of entry and the point of breakout. So in this case, for example, we anchored right there on the 24th, right? And you could see here on the 14th, you had a little bit of an inverse head and shoulders pattern forming here, right? And when you finally put in a higher pivot low and held that key level at 184.50, there was a long trade there that we took right back to the 197 pivot. So the anchors are really helpful in terms of helping you determine which traders are underwater based on your dollar cost averaging at the point of anchoring. So as a person who trades the price cycle and uses supply and demand as their primary indication for making trading decisions, it's a useful indicator.
Yeah, great. A question we got from YouTube is, JR, can you put a few words to each of these terms? Context, structure, and roadmap in trading.
Sure. So context refers to one of three things. So you could have a bullish, a bearish, or neutral context. And what I like to do is make sure that my context is typically aligned across multiple time frames. So I'd like to see a bullish context on if I'm day trading on a 15-minute, 60-minute, and daily time frame at the very least. Weekly helps. Structure refers to the actual structure we're in the market, right? For example, are we structurally in a accumulation structure, a distribution or distributive structure, reaccumulative structure? I mean, I could go on and on. And then roadmap refers to the overall roadmap I'm envisioning as a trader in terms of where things are most likely to go given the context we're in.
Okay.
So
great.
Those are the three sort of guiding principles I use in all of trading on any time frame. Great.
As the leader of the Momentum Express VTF, you also have a mentorship role with the traders in your room. You're there to answer questions and help guide people through trades, et cetera, et cetera. What do you think are the most important daily practices for traders to have?
Preparation is key. I cannot overemphasize that enough. If you come into the market and you don't have levels and you're not really looking at larger time frames, it's very easy to get tunnel vision and completely overlook key things, daily moving averages, gap fills, shakeouts, demand zones, supply zones. I mean, I can't overemphasize the importance of that. So that's I think the main thing. Secondarily is I think in terms of daily preparation, I would say understanding market internals and what the market is doing that day. If you're highly correlated with the bonds at a particular stage in the market, and you're trying to take an opening range breakout off of an overbought gap, and the TLT is diving, you're going to have a bad day most likely. So having a good understanding of those market relationships is really important. Sector, story, all of those things are really important. And then, this is a little bit more esoteric, but coming into the market with a proper mind frame. A lot of people come into the market on, they're on a losing streak, or they had a bad day prior, and they're far too focused on remediating past psychological damage, past P&L damage, and so on and so forth. And they're unable to concentrate to see the chart for what it really is, to assess the quality of the opportunity for what it is, and to make proper sizing and risk management decisions because of that. So coming in with a proper mindset, being psychologically homeostatic in terms of, who shows up that day is massively important. So as someone who does his best to help other traders succeed, that is the biggest thing I try to instill in traders. Who's showing up today? What mindset are you in? Are you seeing the market clearly? Are you trading this moment, or are you trading a loss you took on Tesla 3 weeks ago? So
yeah. What does your own preparation look like every day before 9:30 a.m. Eastern time? What are you doing to prepare?
It all starts with a really large cup of coffee. I'm on Pacific time, so I'm up at around 3:30 in the morning, my time, 4 o'clock, and I'll do my charts the night before. Then I'll look at the futures, and I'll look at all the other relatively important commodities and indicators that I typically watch. And then I'll start looking through the analyst upgrades, the overnight session price action of the S&P futures, and start to put together a plan for the day. I never trade without a plan or a game plan.
Great. Amy from YouTube wants your thoughts on the Bitcoin chart here. She said close to bullish hot dog on daily. She wants your longer term thoughts on it hitting 100,000. And if you want to pull up a Bitcoin chart, you can. So
sure.
You can talk through what you're seeing.
I'll take a look at it. My target is 100,000. It is super bullish. My ascending line from the prior channels around 87.6. You're probably going to form a value area here between 52,000 and 69,000 for a while, would be my guess. This base took 61 bars, about 60 days, a couple of months to give you the breakout to 52,000, and then the secondary leg to 69,000, which was all-time highs. It's a relatively long base, about 3 months. I would be very comfortable transposing this, symmetrical base, and expecting maybe a secondary breakout in June. That would be my guess.
What do you think of the impact of the new Bitcoin ETFs and how that has impacted the price of the underlying coin?
You're seeing it in the chart. There's two things that are going to move Bitcoin. One is lower rates. Obviously, the cheaper money is, the more people are going to take absurd risks with it. And second, of course, is institutional buying in terms of the Bitcoin ETF. It's a big deal for sure.
All right. So as we wrap things up here, what's on your watch list for the remainder of today's day? And what are you looking at for the remainder of the week also? Kind of your favorite setups that you're monitoring for trades in the hours ahead today and the days ahead until Friday.
Sure. I'm watching Uber for a move to $90. Coinbase, I love it to 258. That's our target. NVIDIA is on watch for that important symbolic move to 900 and 1,000. I think very likely we tag 900 in the next session or two, if not today. So that's those are the core watches in our room right now.
Okay, great. All right. So for everyone who's still with us live, there's plenty of people here. If you want more insights from JR, you want to get to know him as a trader more and hear more about his story, you can get his free ebook at t3live.com/JRlive. Again, that's t3live.com/JRlive to get his free ebook, A Trader's Story, to learn more about JR. He has a really interesting story, how he came to be a trader. So I recommend it myself. And again, that is free at t3live.com/JRlive. JR, have a great rest of your trading day. And everyone else, thanks for joining us today.
Thanks, Greta. Have a great one.
All right. Bye.